The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you guys are having a great Wednesday morning. I look forward to Wednesdays because I get to talk to Tom O'Brien on Wednesday afternoon. It's the top. I love it. XLU. We're going to take a look at this thing. This is interesting. Obviously, this is one of the things that has been a kind of a yield alternative, if you will, to these treasuries, which seemingly now the whole new thing to force the globe to go out and actually work. That's an interesting whole conversation, too, by the way, to go out and actually work and force people to not put money in the bank. So when they start doing negative interest rates here, I guess everyone will have to put all their money into the economy, and that will be also interesting. But we're just gonna focus on the charts here on the technicals when it comes to the XLU and this yield play. Really, I mean, I was really astounded that we talked about this. We talked about the notes kind of coming down on support, playing that game. Let me tell some people to stop. And as we looked at this, and we're going to reference these notes in a second, this XLU now is broken out again, and what do you do with it now? We're going to look at the weekly really quick before we start making some decisions here. And we noticed that on the long term, we never even got a new profile to appear on the long-term weekly. We've covered the daily. We look at the 240s to kind of regulate the trade, but we're going to take a look at the notes really quick. And we're going to look at the June contract, and we got a decent bounce yesterday. Here's the daily, and we kind of, we bounced off of that weekly unfair low, and again, that yield going down again with the note bounce inverse relationship kind of, put that utilities ETF that was already on the launching pad, kind of pushed it through some barriers, which I think is kind of, along with the market coming back yesterday and actually touching that 76, 75 area. We want to take a look at that on the S&Ps. That found a little support there. We talked about we were going to ultimately have to have a retracement back into that area. I'm saying a lot of things at one time, and I apologize. But we're going to look at these notes, and we're going to look at the action here. There's the long-term weekly. That 129 was kind of the stake in the ground on the notes, but now you've got a 129.01 sitting here on the daily bottom of a profile. I don't like how it's just completely reversed back down into that. That's not cool when you're coming to the bond party from the long side. But I'm still looking at this as support. I'm looking at these utilities. They're doing this for a reason. Just going back to put the this thing on the map for you. And this morning, I think this is a real print. I'm not sure. I think it is 47.90. So we're kind of opening up a little bit higher than we closed yesterday, even with the notes coming in. It's just, something's weird here. So as we look at, and when you go to the scanner and you pull up the ETF, the XLU, we've been looking at this. Here it is on the daily, third in line here from the top, and then on the weekly, it's obviously just, man, the darling of the ETF world. But we're going to look at the futures here, and what we were looking for when we have a close above profiles, we always kind of look at that wait and see powerful retest. We didn't exactly do that the first day on Monday, but yesterday obviously we had a little pullback, and that pullback, Tom and I think Joey the other day were just pinpointing that let the market come to you. These inflection points, in my opinion, are a pretty good spot to pick battles around from the long side and the short side, and how do you block out one side of the marketplace? We had this, and we're going to look at gold in a second on that same notion. But when we had a close above on the weekly, and then we were saying, you know what, that's a situation where we customarily will have a retest after we close above. Sometimes we don't, them's the apples, but yesterday we had a retest back into 1976, and that unfair high is 1975. So that, again, bringing something that Joey said into play. A lot of times on these longer term plays, it might not be a bad idea, because it's not always to the tick, to just get something on and leg into these things around these neighborhoods. If this is, the MO that you want to operate on, as far as, looking at some long-term inflection points. So again, I think it's really good case in point to what we were talking about the other day, especially relative to gold at that, I think Joey was talking about 56, maybe $2.70 above that inflection point. So here's now a new profile, and again, we had that indication yesterday during the day. So what does that mean within the scanner? You come in here and you look at, and by the way, hopefully this edition will be out today, and then we'll start keeping track of the portfolio. But as we look at the futures section, if you go into the S&Ps, and now this is going to be on that indices grid, all these indices. So this is disturbing to me to have to go back and forth. I'm extremely lazy. But as we looked at this, and I think you'll benefit from it too, from my laziness and my desires. But as we look at the daily, the gray cell there, this was, kind of flashing yellow peel back yesterday. But, all things considered, we were just really, that was a great kind of helping hand to get us back down into 1975. So you get those indications there. So now you've got 1975, you've got 2,750 up top. That's going to be your range, and then you've got another inflection point at 1955. So, what do you do with this? I'm still looking at this as, we broke out. We've weathered a zillion storms when it comes to some of the global disturbances, and the Republican Party fracturing is another thing it's seemingly weathering, because this market likes Republicans. There's a just a fact to that, and it's looking very longish to me. So again, I'm still looking at 75 as support, considering we broke out. Now, the cool thing is that we talked about is, when we were in this balanced area on the weekly, we talked about, this was a place to take some weight off finally, and then wait and see. And that wait and see was close above, and then let's see if we can retest. And now we got that. And this is kind of exactly how this, kind of machine works. So, just keep these things in mind. If the market leaves you, a lot of times it'll come back to you on some of these inflection points. We'll be right back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We belabored the point on the S&Ps pretty hard. I hope you guys got a little bit of a education on that. It's tough when you see the S&Ps go from 75 up to 2,000 and you're like, thanks Logan for telling me to. And you can, by the way, always blame stuff on me. I've got people standing in line to abuse me most of the time. But when these things leave, a lot of times they'll come back, and if they don't come back, they don't come back. There's about 100,000 things to trade out there. And in my opinion, no one should get focused on the S&Ps. It's just a part of the puzzle. But a lot of times, we kind of wait and see, where these things close. And that's a real important part of the game when it comes to these profiles, in my opinion. Okay. So John from Philadelphia is dissing us here. He's not calling. I'm just kidding, John. Look forward to your calling, because if we really want to talk about this kind of grain opportunity, if you will, that you were pointing out yesterday. I'm completely on the same page as you when it comes to looking at a low volatility situation that could explode, and how do you capture that? Thinkorswim does a great hour-long show every day to kind of talk about different ways to attack opportunities with options, and that's the way I wanted to kind of collaborate with John on when he calls. So looking forward to that. Here's gold really quick. And this is the April contract. And as we look at this, and Jay, yes, I will go over that. The question from Jay surrounds the S&P cash and the futures, and probably even the SPY relative to the scanner. I want to talk about that a little bit. So here's gold, and Joey had talked about this thing ultimately could be in the 1600s, but things don't go in a straight line. And he talked specifically yesterday about waiting for a pullback, the first opportunity on a pullback to even pick a battle. Let's see where we're at. I'm lost here. 1253. So he talked about digging in a little bit, 56, just getting some on in case it wasn't exactly to the tick. So now, we're kind of hovering around that unfair high. And while we have John from Philadelphia on, I want to move back to him. We'll come back to gold. John, are you there?
John Logan, good morning to you. I apologize. My cell reception is touch and go, and the gremlins that float around Tiger Denner Jay's house, they hit my landline, so I'm having snafus to deal with, but good to speak to you.
Man, it's great. It's great to hear from you. And on the same note, Windows decided to upgrade me to Windows 10 this morning without. I guess they just had enough of me saying no when the automatic updates happen, and I've been sitting here since 4:30 trying to make sure I can see my desktop. So I feel your pain.
Okay, very good. Say, John, I first have to say the process you go through in tracking the market, especially a trending market like the uptrend in the S&Ps, using your TAS data, it's so helpful. It really is. So thanks so much.
Thank you for saying that.
John, as I mentioned yesterday, I see a great risk-reward setup, frankly, in all the grains on the Chicago Board of Trade, beans, corn, and wheat, Kansas City wheat to boot. Wanted to ask if you can go through the TAS data on the weekly and the dailies for the new crop contracts and give us some parameters to deal with as you see it, please.
On Kansas City, or can I look, like, you want me to look at November 1st or?
Correct.
Or on,
That'd be great.
okay. So,
thank you.
So let's stay on beans for a second. Fundamentally speaking, and I've kind of let some opinions go into my head from others. A lot of talk out there about, so much of the world has seemingly planted so much when it comes to the grains, and then there's been no weather problems, so to speak, and there's just an incredible amount of yield per acre out there on top of everything else. It's just kind of put a lid on this. It's almost like the crude oil, when the supply situation out there, when it comes to crude oil, it's just kind of kept a lid on it all the way down, and then farmers have to sell, and the producers know that. So what you're talking about, I'm assuming, is possibly taking this low vol environment and then being able to take advantage of that, because no one is obviously, with the price action, no one's really expecting anything weird to happen, and that's when it usually happens. John, I'm just paraphrasing
exactly right,
paraphrasing what I think you're thinking.
Correct.
So yeah, so a really, I talk about this type of play with my buddies down who own grain elevators in the eastern part of the state. That's not the breadbasket of the U.S. by any means, but what we always talk about is simply a real simple way to play this is just to kind of buy some strangles that are relatively wide, because, and I always go, well, you know what, beans have been beat up, and you know what, I mean, I think the play here is just buy the calls, and we always go, well, you know what, that's what everybody's expecting. So if we get the strangle on, buy the calls and the puts way out of the money, and time decay is not going to affect a lot of these things that you're looking at here with the November contract. And let's just say we do get some knee-jerk down that just completely finally runs everybody out of town on the long side. Then you're clipping off those puts at a profit, and then you've got a free trade on the calls, if that's going to be something that eventually maybe we might have a scare or two. So we go ahead.
John, that weekly chart on November soybeans that you're currently showing in the Tiger's Den, it's impressive that a weekly TAS box has been in effect for truly 6 months.
Totally.
With 915 on the top side. John, could you pull up the daily on the expanded view and see what that shows us?
Yeah. No, that's actually a really good point you brought up, because the longer those boxes stay in force, the more powerful they are, and the more they actually ultimately will have a more powerful breakout away from them. And I know that's kind of a oxymoron what I just said, but the longer they stay in force, the more powerful they are. That's a fact. And when prices finally get out of those areas, they usually move more violently than they do out of these boxes that are in force for just a short time. It's such a good point you just brought up. Here's the daily, John.
Yeah, very good. What is, when I'm looking, we're at the top of a range up at the $9 range with the task box beneath. What does that tell us as you see it, please?
All right, well, we've got to go to break. I hear the music. Can you hold on? And we'll
I sure can, Joe.
Keep chugging along. Thanks very much. We'll be right back, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. John, are you still with us?
John, I am. Thank you.
Great. Yeah, going into the daily on these November beans, I'm kind of, I mean, this is my personal slant on it. I'm kind of ignoring the daily right now. I'm looking at this like you're kind of looking at it. I'm looking at the long term, and I've liked these inflection points on it, and I'm looking at the range 915 to 860 as a long term kind of buy the breakout on the strangle outside of that area and try to catch a wave away from the, the kind of the balanced area that you so implicitly stated has been enforced since what it looks like September last year. Yeah,
Correct.
September last year. Yeah, I know there's a lot of give and take from 860 to 915, but that's just the way I'm looking at it. I think there's I know that the option volatility is low on this, and I know that these options way out are pretty cheap. Even buying like the 950s and buying the even the 8 to be a little bit more bullish and bearish, maybe buying the 830s or something like that. I just don't see that being a high risk trade at all. And I think what you said earlier, also just coining what you said, that really is a super good risk reward scenario, because I'm sure, and I haven't looked at these, but I'm sure that the spreads on those options aren't incredibly bad. As far as getting in and getting out of.
Right, John. You raise a very good point of tactically one way to handle this if one wants to speculate, namely using options or doing a bull spread of some sorts. Alternatively, one can go directly to the futures. Just for what it's worth, full disclosure, I am long that particular contract. I bought it the first week of January down under 880.
Okay.
Just running a money stop, and I've never been stopped out. And from a futures trader perspective, what I've found in handling situations, quiet markets like these, a successful way to approach it is to take a position, with your stop losses, of course, always managing risk. And if it doesn't work profitably, but if it doesn't lose on you, just stick with it. Just keep re-entering your stop losses each week. And in the case of this, I haven't made any money to speak of on this, but I haven't been stopped out either. And as I'm looking at your weekly chart, it strikes me that, we need a rally over 915. If we get that would be the kind of situation where I think using your work is where I'd look to aggressively add to that winning position.
Yeah, I think I'm totally with what you said earlier about playing around with the stops. And one of the things that a lot of folks, you listen to Thinkorswim, they got incredibly good information, and I love listening to the banter back and forth between Kevin and I forgot the other guy's name, but they're a really good team when it comes to really giving good education on the options in general. But one of the things that they don't really talk about too much is, I've had a ton of success. You've got a kind of a bullish slant, obviously, on these November beans, but a lot of times instead of getting stopped out, a lot of times you can kind of let an option stop you out. And what that means in this case is had a lot of success going long, in this case, going long November beans and buying some in the money puts against that long futures position, because the farther you get in the money on buying the hedge, the less and less you're paying. And in this case, I've got to look at this particular situation and figure out, what's the best strike and what's the best combination of this. But when you buy in the money insurance, so to speak, a lot of times you're paying less and less for the volatility part of it. You've got to have a bigger move. But the cool thing is if beans goes to like $8 a bushel, you pretty much have defined your stop. More than likely, let's just pick a number. Let's say we buy the 915 puts, and we're buying the 895 beans at the money right now on the underlying future. So you're 20 cents in the money on the puts, and let's just say the option costs 26 or something like that. So that you can only lose 6 points. Right, and that's kind of cool, because this thing could really take some deep dives, and you could still have 3 points left in that 6 points, even if the beans start going way south. But if you get that move like you're talking about, a lot of times those options will hold their value because it's kind of a VIX type thing going on. The volatility explodes. You're making a really good amount on the futures, and you can decide whether you want to, at that point, when you get that powerful move up, you can decide whether you want to sell some options up top and kind of start locking in things and play around with the spread, or sell some calls up top. Or you can just say, you know what, hey, I'm a winner, and I'm going to dismantle this position because it did exactly what it was supposed to. Or you could do what you're talking about. You could kind of raise up the stop, so to speak, or raise up the put in the money situation. You know what I mean? There's a lot of things to do when you have a nice backstop looking for a powerful move, and it happens. And if it doesn't happen, you just had that risk reward come true. You risked 6 points, and you were more than likely looking at making 40 or 50. It's a really good way to trade these things a lot of times.
John, thanks so much for sharing those ideas. That's very helpful. I'm going to sign off so as not to monopolize your show. Could I kindly ask you to please, when you have a moment, to share the weekly and daily on 2 other contracts? That'd be the July wheat, the July Chicago wheat, and the July Kansas City wheat. Thanks so much.
Nope. Thank you. Thanks for calling, John.
Right, bye.
Okay, so I'm pretty sure he said July wheat and Kansas City July wheat. So we're gonna make sure we get those on the board. Okay, here we go. Okay, so first question before I get into those 2 products, RJP has got a question in the den. And it's great when you guys ask questions in the den because everybody can possibly benefit from it. In your experience in a long consolidation such as in beans, isn't it often the case where the beans would break out one way, flush out all the breakout players, and then move powerfully in the other direction and never look back? I vividly remember this scenario take place in the 2000, I think it was in beans. I'm from North Carolina. I got to read things twice. John, in your experience in a long consolidation space, isn't it often? Yeah, I mean, that happens a lot in gold. If you guys trade gold, that happens. I'm just going to go back to this little scenario back in December, between late November and first week of December. We had that breakout. We moved back into the balanced area on the long term, and that was very disheartening. And now we've just kind of fallen into mush here. When we come back from break, I'm going to answer that question a little bit better, RGP, and you guys stay tuned. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. We got about 15 minutes airtime. We're going to try to cover everything that everyone's asking in the den first. And look, going to this November Beans, the first week, or last week in November, first week in December, you know, John was referring to these daily situations. Here's that close above, retests. I mean, you know, within that long-term weekly profile, there's been some trading opportunities. This is one of them. But I want to go back to this and kind of prove that we're not always right here. We get the close above a profile. We go back and retest it, especially this is the same week that that daily happened, and it caved in. This is what stops are for. And this is, you know, these are targets on moves like that. And then we talked about, you know, the wait and see. Let's see if we get a weekly close. Well, we got a weekly close in this case, just like the S&Ps, and we went back and retested, and there was a opportunity. But this one was like, oh, hey, let's retest it, and then, oh, God, the world's coming to an end. No, that's trading, and that's what stops are for. So we just keep, you know, playing the opportunities. I want to finish some of the things. Choking in my own spit here. I want to finish some of the things that John from Philadelphia had asked. Let's take a look at July wheat on the CBT. I can't say CME when it comes to these grains. I have to say CBT. All right, so CFTC shows spec. Yeah, I would assume so. Yeah, saying there a lot of speculators are short. Is this corner? This is wheat. I'm sorry. God, I'm losing my mind. This Windows 10 thing has got me all upside down. It's amazing. You wake up, Windows 10's upgraded, and you have no desktop, and you have to kind of reform it. Anyway, what we have going on in July wheat right now, obviously, and I'm going to go to the scanner. We should be showing this. If I go to wheat, and we're showing May on the scanner right now. That's the front month contract. Okay, so we're going to focus on July, which is what John wanted to focus on. So new profile attempting to appear, which means a new demand area down below, new profile. I'm going to look at the daily. Got a little bit of a break in trend on the upside. But again, I'm a little scared to go long and scared to go short these things, John. I mean, I'd rather play them with, you know, just kind of a low volatility play like the strangle, buying the strangle, and then kind of seeing what happens. And you know, the interesting thing is about, as you know already, John, is, you know, these summer crops, it's always, oh my God, how much is left and how much is getting planted, and you know, there's also droughts and things like that are starting to be worried about. That this is an interesting month of the year always to do those volatility plays, and it's a gift in my opinion, like we talked about before, to have this caving in at this stage, to be able to just put on a killer risk reward scenario. So what I wanted on as far as buying volatility right now. So what I'd like to do, and there's no free lunch, you can always, lose some points on a trade like this, but I think it's just a great time to do a non-directional trade. I'm not, we could, again, like RJP was saying, we could get one of those flushes down before we move up just to make sure everybody's out and everybody's stopped out. So I think the strangle, again, to beat a dead horse completely is possibly the way to go here. I want to look at also this Kansas City situation. Let's see. Let me see if this is the symbol on, no, let me, what is, I don't know the symbol. Okay, KEN6. Okay, got it. KEN. Oh. I'm proving that I'm an idiot again. Here we go. Looks pretty similar to July. Looks a little bit more productive on the long side. Again, the big inflection points, 461.5, 497 and a fourth. Again, I think this is just the volatility's caved into the point. I think the strangles are just in order here. But remember, lofty aspirations on the long side right now are 497.5. If you've caught this breakout recently above 470, that's great. But again, that's probably your lid, 497.5 on the long trade here, and then stops below 470. Thanks. Okay, so let's talk about the S&P cash versus the S&P futures. Now, believe it or not, I would have said 10 years ago? 10 years ago, maybe 10 years and before 10 years ago, I would have said that the S&P cash might not be a bad thing to look at relative to profiles. I'm so much more partial now to looking at the futures because, I've talked about this a lot actually, and I'm sorry if I'm rehashing this again, but as we look, and this is still the March contract. I can look at the June contract too if anybody wants to see it. You're welcome, John from Philadelphia. There's so much valid activity now overnight in the futures. I mean, you can make a living now trading overnight in the futures if you decide to stay up 24 hours a day, where before it was a lot of weird things that guys in Chicago maybe were just running stops and, okay, wow, there's something that happened in Shanghai, but let's kind of focus on the U.S. market. And that means that, that cash S&P market really meant a lot because it arbed all the situations with the underlying instruments, and that was the case. But now, I mean, I think if you're using volume versus price analysis and volume and time at price analysis, I think you've got one arm tied behind your back when it comes to analyzing what's available to be analyzed and valid to be analyzed when it comes to forming profiles in balanced areas and trying to predict these things. So, Spider, again, not a lot of night activity on that, zero in fact. And when you're looking at these futures, I think now you really want to just kind of grab all the different gyrations and volume prints that happen all along the way. So does that answer that question? I just think, and by the way, really good point here. When you have the scanner, you actually have all this information aggregated off the futures, and there they are down there. You're not paying for real-time exchange fees, and you get these real-time price derivatives, and that's completely okay. But you're able to grab a lot of these futures. I mean, trust me, these are not cheap when it comes to gathering all these COMEX, NYMEX, blah, 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 and putting them on one screen for you. So you get a lot of good information here, and it's all aggregated from the futures markets. And I think that's pretty cool. We'll be right back, guys.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. Had some pretty good discussions, I thought, and thanks so much for John to call in about some of the grain questions. And let's see what else. What else do we have here? Jay's question, grains. And I think we're good on the questions right now. All righty. Okay. All right. So we're going to just, good Lord, let me get Windows 10. You got to love it. Anyway, we're gonna go back to something. Just want to take a look at here. Shanghai, nothing new here, and I think nothing new here actually bodes well for the U.S. market too. So this thing's sitting still or going north. It's not bad. Going down, I don't even know if the U.S. market cares about it anymore. It seems like it's disengaged from it. So that's where we're at here. Take a look at gold. I talked about going back to this. Okay, Jay is asking this. Let's see, could you could you go over the question from yesterday about the difference in the ES and the S&P cash chart in the scanner? I thought I did. I thought I went over that, but S&P cash, in my opinion, is not going to give you the best information when it comes to profiles. It's obviously more of a continuous chart, but again, you're eliminating. I don't ever look at the S&P cash on here when it comes to these profiles because it leaves out what almost 2/3 of a trading day, basically. Is that fair to say? How long is the S&P open? 6.5 hours? 9:30 to 4. Let me see. No, that's not 6.5 hours. Is it? Yeah, I think so. But anyway, I'd prefer to kind of look at all the information for the rest of the 2/3 of the day when I'm compiling profiles, and that's what we do. And Jay, I don't know if that answers your question, but I'm just kind of staying away from the S&P cash when it comes to looking at these. Okay, got it. I think Jay's saying, "All right, Logan, shut up." Here we go. Let's take a look. Let's take a look at gold. I'm just kidding. All right, so we looked at this as 1253 area. This is something you can orient stops around if you're going to continue to buy the dip on gold here. There's another big inflection point at 1218, 1219. So if that doesn't hold, you're just kind of sitting in no man's land on the intermediate here. And then if you have to trade, you're going to have to drill down into the 240s. All right. So we're sitting at a precipice right now. And the cool thing is, like Joey was talking about yesterday, you can orient some stops around this area, and that's cool. Now, if he's, was talking about digging in a little early and maybe kind of legging into something, you're going to give yourself a little bit of noise around that profile high there. And, don't put your stops one tick below that. That's always not a good idea. Man, silver. I just feel for people who are, man, look at this. Whenever we got an inflection point on silver, it just seems to bear more fruit than the gold situation. Here's the backing off of silver. And if you look back in time, I mean, this thing has not shown a lot of usefulness when it comes to going long. So, again, I think you've got, that's not really something to put on the board, in my opinion. Best use of your capital. A lot of times you'll spend mental capital on these type trades too, just wringing your hands, and there's in my opinion much clearer pictures when it comes to products out there to trade in silver. Guys, you've been great. Stay tuned for Larry, Tom, Steve Rhodes, Basil, God, who am I forgetting? David White, Andy Heck. Stay tuned to TFNN, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.